Hey guys, welcome back to the channel. I hope everyone is doing well. So today I want to give an update on some of the YieldMax ETFs, like the earnings dates, like the IVR and the implied volatility overview. So I'm thinking like which YieldMax underlyings have like good like stock earnings, and then which ETF could make more money in the short-term future. So I think unfortunately Tesla kind of like started things on like the wrong foot, and but I still think there's still like some like good chance to kind of like maybe redeem like some of the yield max like the overall earnings. So let's just start with like Coinbase. Actually, I'm sorry, I should actually go back to the spreadsheet first and then maybe just go from there. So give me 1 second. So I'm gonna kind of pause in a few places just so everybody can like just take a note and like jot things down. So unfortunately, I don't think I can fit everything on one nice page, so I'm gonna have to kind of scroll up and down a little bit. Hope that's okay. So I made some modifications to the earnings date. Some of them like shifted a little bit. So I think like going forward, I think I probably want to just go with like maybe like the top five like implied volatility, the top five like IV rank, and then just kind of just show you like the difference between like the IV implied volatility and historical volatility. Just because like it would be like too cumbersome, like I don't want the video to get too long. So I hope everything, like you had a chance to kind of maybe just like eyeball everything and just like jot some stuff down. So let's just go back to the PowerPoint for a second. All right. So let's start with Coinbase. So there's still some time here. So February 15th. And unfortunately, I wish like there was a way for Thinkorswim to kind of update like maybe like like a week or so like beforehand. Because I noticed like some of them like they pop in like I guess like it depends on the volume as well. I don't know how like they actually like when they start like populating, it doesn't seem like to be like anything consistent. Because even like Tesla, like the earnings already happened, but they didn't populate the stuff yet, so it's kind of weird. And AI, so again, I think we have some time here, so March 7th. And then the next one, Moderna, so we have February 22nd. And I'm kind of hoping that there's like maybe they have something in the pipeline because like this stock has been pretty volatile, but in a good way. Like maybe like they'll surprise in the next earnings release. And then we have Square. So this guy is like February 22nd. Over here, there's still a little bit of time for PayPal as well. So but February 7th. Although I guess like their announcement, I guess like the Wall Street doesn't like their announcement with like alleged AI capabilities. So well, we'll just have to see. And then over here, I switched back to like the Tastyworks platform. I think they're one of the few. I mean, I guess on Thinkorswim you can kind of manually create this yourself, but I just didn't feel like it. So sorry, I have to kind of like flip flop back and forth between like different platforms. But I just want to kind of show you guys like I guess like each platform has like their own merits. So over here, like if you take like the ones that have like a high difference between like their implied volatility and historical volatility. So, you can look at like Meta as maybe if that's maybe your preference, if you think that might work for you. I guess like you can go from there. Like so like from the top five, like the difference. So you see like Facebook, they have Square, they have Amazon, they have AI, NVIDIA, and then Microsoft. And then another measure is just the implied volatility rank. So just as a reminder, it shows you like the implied volatility against itself for like the past year, like the highs and lows. Over here, you can ignore XPI for now because it's not released. I'm just keeping track of it for like my own purposes. And like Tasty Live research shows that anything above 30 is pretty good. So I'm just showing again, I'm showing the top five. So as you can see, there's definitely some overlap, and then like you can have like some surprises here and there. Like AMD, I guess it's not too surprising. And they have PayPal, Moderna. Although Disney, I'm not sure why it's so high, but I guess you know you guys can do your own research at your own pace. Also, Microsoft is also up here. So AMD, their earnings is coming soon. So like it's doing fairly well in terms of like implied volatility. So that means more juice potentially in the ETF. And also same thing with PayPal. Although they've kind of like I guess like the street didn't like their alleged like AI announcement. So maybe there's like some hope that during the release date of like the earnings, like maybe that'll help prop things back up again. Same thing with Moderna. It's kind of like a little jagged, and then like now it's kind of heading back up, and then who knows? Hopefully, it can sustain like this level of volatility until like the earnings release, and then after that, you guys can kind of make your own decision whether you want to keep MRNY or not. Same thing with Disney, although I think this one is a little skewed. I guess like there's probably like some like a bad print or something because I don't see why like Disney would have like such high implied volatility ranks. So it might just be a fluke. And then Microsoft, same thing. We should have like some earnings release. Although let me just go back real quick. Microsoft. Yes, so Microsoft. Oh, actually, I'm sorry. They actually. I guess by the time this video comes out, like the the earnings will probably have already hit. So depending on the timing. So guys, like obviously do your own research and go from there. Now, I think there is some alpha here, but there's also some traps. Like, I always like to tell people like you want to do your own investigation. Like this is still theoretical and it's definitely a work in progress and there's room for improvement. Like you shouldn't trust random pandas on YouTube because they like to trick YouTube copycats. So I guess like just to sum everything up again, we're just gonna end this on like the usual risk. Like I think the high expense ratio kind of it's a small drag on like performance. We don't have any control over the option strikes, and implied volatility could collapse. But I'm hoping that this type of research helps people maybe like to help make their own like decision making, like kind of show you like the opposite side of like which ones are actually have it, the implied volatility for now, and then people can maybe swap back and forth. I mean, if you want, if you don't want to, that's fine too. And things can always get cheaper, and the yields won't be consistent from month to month. So if you like this type of content, please consider giving us a like. All subscriptions are welcome. Thank you for all the new subscribers so far, and thank you for watching. I hope people make some good money out there, and I'll see you in the next video. Bye now.